Hi, my fellow YouTubers. Hi, my fellow YouTubers, my students, my Alice. Thank you guys for joining. Please share the video, like, subscribe, go through it multiple times. If there's an advert playing during your video, please allow it to finish. Okay, so I want us to look at the general ledger. The reason I wanted to do this video, it was particularly for my grade 10s that still need a little bit of taking by hand in terms of the general ledger accounts. My grade 9s also, you need taking by hand. Also, this is very good for those who are doing accounting at university and they've never done accounting and all of a sudden they have to do accounting. And yeah, my students always say yeah, kind. So this is just to help you guys to refresh on the concepts. So I will need to do a YouTube video on subsidiary journals. That's a story for another day. I need to do that. So this is after the subsidiary journals have been compiled by the learners. So this is not my work. This is from IEB. It's IEB past papers. So this website is mylink.co.za. So it's in conjunction with the Department of Basic Education, IEB Siavula. So they have put this on. They have put this on for you students to practice. So this is not my work. I did not develop this question paper. I'm just assisting you to practice and understand concepts. And this question paper just came in handy. So it is not my work. I'm putting that disclaimer. So let's get down to business. So this is a general ledger. They're giving you general ledger information. So they're saying on 31 August, the following information appeared in the books of Pretty Pillows. So if you're an accountant, I will not rush. If you're an accountant, I always say, understand your period. Let's put that on bold. I always say, I'm saying it slowly. I always say, understand your period, because if you don't know the period you're reporting for, you'll be taking information that is falling outside the period and making it part of the period, which is so not Ayoba. Okay. The second thing, you should know your client's name, because now if you don't know your client's name, then you're going to think any supplier they mention is your client, which is definitely not true. So Pretty Pillows uses, so your client is Pretty Pillows. So always know your client name. Now, they say Pretty Pillows uses 60% markup on cost on cash sales and 80% markup on credit sales. So this is IEB, guys. IEB will always put a spanner in the works, tricks for you. So now you have got two markups for a lower markup for cash sales, a higher markup for credit sales. So I've put a video on ethics. I just want you to ask yourself, is this ethical that the same item can be priced differently because due to this method of financing that has been used? I just want you to see if that's ethical or not. That's a good question right there. So these are the balances that appear in Pretty Pillows at the end of July. So they've given you opening balances for debtors control, trading stock, and packing material. The following journal totals were extracted 31 August. So this is the subsidiary journals for the reporting period you're working in. Let me be slow because some students will be like, maybe you're too fast. Okay, so these are the subsidiary journals that were given for the report, for the period you're reporting on. So the first account I developed, it was petty cash. So petty cash, were you given a balance, an opening balance in July? No, you were not given. So you will write 0. Balance brought down, nil, you have nothing. Then we'll take these balances as at the end. I don't know if August ends on the 3rd, I think 30th. Hi, Bazalan, let me not make up stories. I think August ends on the 31st. Yeah, 31st, because my cousin is born on the 31st of August. That's how I know. Okay, so month end, of August, there was a transfer from the bank account to the petty cash box or to the petty cash clerk. The money that was given to that clerk is 450,000. We agree it's given information. So petty cash is an asset. So that 450 will increase the petty cash account on the debit side. Now, you have debtors control. The 450 was used for debtors control, packing material, wages, and sundry, which is miscellaneous items. So the most important thing, guys, is for you to add these totals and see if they give you the amount that was transferred for petty cash. Which is 450. So I'm happy it's balancing. So debtors control. So you must put the folios. So you must put the folios. So your folio is petty cash journal. So it's PSJ. It's PCJ. Now I'm thinking of passengers, a picture according close to our place. So it's 450. So debtors control, you have to debit because now we're taking from the 450 and spending it. So the 450 is decreasing. So assets will always decrease on which side? On the credit side. Go through the video that explains the movement of assets in a general ledger. So you've got debtors control PCJ 200, packing material PCJ 130, wages, salaries, and all. So you total that, it gives us 450. So we don't have any balance brought forward. We are breaking even. So we can't have a balance carried down because the amount we received is equal to the amount we spent. So let us move on to the second account. So the second account I'd like us to do is debtors control. Okay. Okay, so now let's go back where we're given the balance for debtors control. Yes, we're given the balance for debtors control, and debtors is, drum roll, assets. So assets increase on which side? On the debit side. So let's just copy this, put it here, copy this, put it there. What's the amount? It's 16,200. 16,400. Apologies for that. Okay, so we're given the balance. So petty cash or petty cash, we had 200 Rand that we spent on debtors control. So debtors control, that means when we create or when the customer creates a liability with us, it's on the debit side. When we pay the customer, I mean, when the customer pays us, then the debtors control decreases. But in this case, which is very interesting, we've got debtors control. We paid a debtor. Okay, we would pay a debtor if a debtor, say, they claimed. We would pay a debtor if a debtor claimed a refund. Okay, so we have petty cash here. Correct me if I'm wrong. So we have petty cash here because we paid this debtor. So we can't write petty cash here. My argument. Understand me, ladies and gentlemen? Can I just fix this? Thank you. We can't write petty cash here because it's as if now the debtor paid us. They can't pay us through petty cash. We would use petty cash to pay them. So that's my understanding of the matter. So you can share your understanding of the matter and then we can dialogue and then see if we reach a conclusion. I'm very open to corrections. There is no perfect teacher. So this is 200. Because the other argument would be if it was credited in the petty cash, it needs to be debited in the debtors control. But now I'm just not following blindly because it's as if now the debtor, it's as if now that if we're putting it here, it's as if we still have the debtor, but we've paid the debtor something. Okay, so that's just my understanding of this. I stand to be corrected. Plus, anyway, the balance here would have included whatever we needed to refund the debtor for. Okay, so let's move along. Now we are finding debtors control. Now they want us to calculate the debtors control. Interesting. So let's just okay, which is easy because this is we need to find the value of the unknown. So we need to use X. Okay. So let's get the cost of sales. So cash sales markup is 60%. Yeah? So let's just write calculations. So X, we don't know. X we don't know, but we know that it's equal to 8,000 multiplied by 100 divided by 160. So X should be equal to X should be equal to 500. So I like to remind accounting students, maths is heavily integrated. Accounting is heavily integrated with mathematics because there is the narrative that when you go to university and you want to register for BCom accounting, they don't necessarily need you to have accounting as subject. They say they need you to have maths. I always say, yes, that's the narrative that's out there, but I always say invest and save yourself lots of headaches. If there's accounting offered in your school, do it. Yes, you'll be getting distinctions first year, which is you need to be in the dean's list. So you're not losing anything at all. And it saves you the rush of doing 3 years work in 1 year. So in high school, math is heavily integrated. Accounting is heavily integrated with mathematics. Okay, I need to correct myself here. It's 8,000, ladies and gentlemen. It's 8,000. It's 8,000. So meaning here it's 5,000. Let's just look at it again. Multiply by 100. I don't know what I calculated before. That gave me horrible things. It's 5,000. Are we happy? So our cost of sales is 5,000. So now we need to find another X because our bank should be the money we received from sales and the money we received from debtors. Cost of sales, we didn't receive any money. And the money we received from sundry, amount. So let's try this. So X, again, integration, equals to in X equals to 14,560 minus 1,000. We don't know. This is the X we're looking for. Plus discount. Because in this case, we're subtracting everything. So we'll say plus the discount. Because remember, the sales, what the money we're getting, we're taking it out because we want to see the balance. So the money would have subtracted, we'll add it. I hope you get the logic. Minus 960. So X should be so X is 5,675. But now this makes me think that if this discount was not subtracted, so it means the receipts were less that discount. So maybe let's subtract it. Hope you're getting me on my change of thought. So we have 5,600 because it should have been on a bracket if it was not subtracted. So you have your X. Now, this is a cash receipts journal, so it means the debtors were paying us. So their liability So it means they were paying us. So whatever they owed us here, it's reducing because we received cash from them. CRJ 5,600. Cash payments journal, we've got debtors control. So this is likely that there is a debtor This is highly likely that there's a debtor that paid us and the account didn't have money in the check day, so the check bounced. So if somebody bought pillows and they gave us a check of 2,000 and we want to cash it only to find out their account has got 300, that check will not cash. It's like somebody paying you with an account that is insufficient fund, it's gonna decline. So as much as we would have recorded internally that so and so has paid us, they have not paid us. So the liability we would have reduced, now we need to increase it. Do we need to bring it back to the book? So we'll say bank. CPJ was the amount 450. Then you've got debtors journal. Then the debtors journal, they've given you the cost of sales, but they didn't give you the sales. We need to calculate, you guessed it. Calculation time. We need to even have a song for that. So now the markup changes because debtors journal, it's all your credit sales, which is 80% on markup. What did they give you? They gave you cost of sales, so it has to be the other way around. $3,000. It's 5,400. Correct me if I'm wrong. So now the contra account is your credit sales. EJ, the amount is 5,400. Show your calculations because in IB or in any other setup, you earn method marks. Then debtors allowances journal. Debtors allowances, these are the returns. So these are the returns, or you can say debtors or sales allowances. Let me wrap text and match. Oh, my back is hurting. So you will have to use this. This is DAJ. What is the amount? It's 600. You guessed it. So in this case, we sold pillows to people. They're not happy with them. They returned them to us, and we gave them a credit note. So now that is the creditors general. So it was a debit entry and the credit entry in the debtors control. So we don't know what that was. So we can just write here. I'll just name it Sandra's. Because those are general entries that were not told what they were for. I'll just name them Sandra's. Hey, English guys. So GJ in the debit, we had 1,200. On the credit, we had 700. Did I miss out anything? No. Correct me if I'm wrong. So which side is bigger than the one? Obviously, yay! It's the debit side. So we need to balance here. This side. Balance on the debit side, which is, wonder if it will agree. Agree because, yeah. $24 or 50 minus 6,500, which is 17,550. So that's the balance carried down. Then on the 1st of September 2018, you have Lanspeedy and why is this thing so funny? Okay. Guys, are you happy with the debtors control? Okay. Let's continue. The next account I'd like us to tackle is packing material. Packing material. Okay. So packing material. Never mind, my daughter is playing with the phone. You are given a balance as of July, packing material 1,230. So packing material, go back to the notes I've given on expenses, those YouTube tutorials, you're going to understand why we're treating it as an expense. Okay, so balance, copy this as is. We copy this as is, and the packing material is 1,230. So we have it here. We paid for packing material and PD cash. Petty cash is 130. Packing material, let's see, we have it here. Cash payments journal. We just copy this guy here, bank. J. It's 870 if I'm seeing things correctly. So we have it here. On Debtors Control. And we have to solve for X again. We're getting good in this thing. So it's gonna be in this sense because your creditors control should equal to all those accounts that were incurred. So 9,800 minus 6,100 minus 2,250. There you go. Was it difficult? No. So here we purchased 1,450. then we returned some purchases, some packing material we're not happy with. So this one is CAJ. $10.40. Did I miss out something, guys? Please tell me if I missed out something. So let's see which side is bigger than the other one. Definitely this one. So in fact, let's copy. There you go, guys. This is becoming easier. I know you guys are very smart. You are nailing this. So the account I would like us to look at is wages. Do we have any balance given? No, we do not have any balance given. So we've got wages. Wages is an expense account. Expense account. Expenses, the increase on which side, guys? And there's my contact details there. Let me pause a little bit. There's my contact details there. Okay. R50. Yeah? The expense was created. Let's run. Let's go. We have any other one? Seems as if we don't have any. So we're done with wages. Sundries. Sundry account. Oh Lord, on debtors control. What did we do with the discount? We should have had it here. Sorry guys, I'm just seeing discount now. 475. Balance brought down, it should be this. Okay, guys. Apologies about that. So I am doing the sundry accounts. So it should be, there's interesting things that go in sundry accounts. Expenses, it could be income, it could be anything that doesn't have an account. So really, how do we do this account? Because it's like the other income account or the other expense account. I just hate. We don't have a balance brought down for sundry accounts. So we know that we paid a sundry amount of 70 rand here. So we will have here petty cash. Guys, I lie here. This date is this. And because we don't have a balance, am I sleeping on the job? Which is not allowed, petty cash. It's proving that I'm no machine. PCJ 50 rand. Much better. There's no balance given. So sundry account is gonna be the same, similar thing. In petty cash, we had 70 rand for sundry accounts. Found sundry accounts, ne? CRJ. This is paying. This is us paying. So yeah, this is us receiving the income. The sundry income that we're. So this one is sundry expense that we're paying by petty cash. This is sundry income where we got the money. So bank. And 60. Then we had payments again. To 740. Do we have any other? No, we don't have. So now we have to see which side is bigger than the other one, and we balance. So you've guessed it. We have a balance. Okay, that was my daughter, so I had to be a mother. She wants my password. Now we're done with petty cash. So okay, so I just had to quickly attend to my sister then. Okay, I'm back. So we're done with petty cash. Now we're moving on to the CRJ. And the first account we stumble upon in the CRJ is bank, the mighty bank. So let's do the bank account. Let's check if there was a balance given. No, there was no balance given. The first thing we would have done on the 31st is to take money from the bank and pay the petty cash. That money is 450, you guessed it. Then what has happened now, you've got your sales, which increased the bank account. In fact, we will call this total receipts. CRJ 13560. Now we've got our total payments. Then 360. Do we have any other bank entry? No. So which side is bigger than the other? You've guessed it. This one. Okay. Guys, why are you not correcting me? It's CD. CD here. What? It's CD. Sorry. CD here. CD here. It's CD here. It's CD. Then it's VD here. So bank. Then the next one is sales. Sorry. Do we have any balances given for sales? No. So we have income that we received for sales. So on debtors control, so this is bank. Just CRJ. I think it was 8,000. Am I saying things? Then we've got debtors control. Which is DJ. $5,400. Then we have debtors allowances. Some will not put it here. Some will just put it in an expense account. But I like putting it all over so that we've got clarity as to what is owed. So on the general ledger, there's debtors control there, but they don't say what this debtors control is. So for me, it looks like sales. I'll assume somebody bought something. I don't know if my assumption is right on credit. Seems as if. So 1,200. And then it seems as if we had allowances. of 700. Hope this account is right. Which gives me to okay, so for now, I just want to do balances. Ne? When we are closing off, I'll just be doing balances. No? When we are closing off, I'll just be teaching you about a new account called profit and loss account, profit or loss account. At year end. There we go. So then there's cost of sales. Cost of sales. So inventory. You don't have a balance given. The RJ. I think that was 5,600, that cost of sales. Yeah. Guys, I'm telling you, like, cost of sales, there expenses Can you smell the disaster? Yeah, guys, the mistakes I'm making. This is income. Income increases on which side? Income increases on the credit side and decreases on the debit side. So we did vice versa. Can you imagine a whole member? Let's just move this one there. I apologize, guys. My error. I'm also learning. Delete. So remove this one here. Perfect. Now remove this one out of here because this is expenses, so the interest on the debit side. So let's see. Do you have any other cost of sales? Yes, debtors general. You have DJ. Then allowances. AJ. Nothing you've done. Mm-hmm. 8,000. Stuff also. I hope it didn't mix things around. What's the next thing we have? We've done debtors control. We can do the discount allowed. Debtors. Then we have trading stock. We're done with the petty cash, done with the CRJ. Now we have the cash payments journal and the account that we've not done here. Come back. Then we've done trading stock, we've not done. Packing material, we've done. Debtors control, we've done. Debtors control, we didn't do. So we have to tackle the first one, trading stock. Balance. They're given a balance. So trading stock is assets, so it will increase on the on the debit side. The balance we're given here is 74,500. Okay. Now we need to find trading stock. Maths integration. So for X, guessed it. Then 360. Minus 870. 450. 2,300. 870. That's my daughter, guys. Minus 100. Minus 2,750. 2,740. I hope I'm right, guys. 3,900. So bank J. What's the amount? What's the amount? 3,900. Then we have got cost of sales. Remember? This one. J. Okay, so we've recorded the cost of sales. We've recorded the cost of sale, the purchase. We've recorded the cost of sales, which is the 3,000. Now the creditors control we need to record. Creditors. $6,100. Hope I'm right, guys. Creditors allowances. So it means we returned inventory for 750. Purchase returns. J. Okay. So which side is bigger than the other one? I hope I've recorded everything, guys. As in like everything. Okay, so guys, I hope I didn't do izinto zami la hey khathalekile yo. Okay. So what is the next? So we've done trading stock, material. So now we need to do creditors control. Creditors control. Do we have a balance for creditors control given? No. So we've got a bank payment. We don't have a balance. CPG, I mean. I lie. This is, okay, so trading stock is assets. So assets increase on the debit side. So this is the purchases and the returns. So the creditors control is a liability. So liabilities increase on the credit side. So if there is a payment on creditors control, it is to be on the. Thank you for accepting my apology. So it's 2,300. No, I guess. Yeah, 2,300. Then we've got discount received. CPJ. Okay. So we've got creditors journal where we purchased many things on credit. So these are your credit purchases. CJ. $9,800. Creditors allowances journal. Us returning the stock. Then there's creditors control. I'll just say sundries. CJ. That's my total, guys. Yeah. Okay, I'm back, guys. Needed to do some other duties. So this side is bigger. And 400 minus 6, 160. I'm hoping sundries 600 is the other sundries. If the other sundries is 200. Sorry about that. And 6360. Okay. equipment. So there was credit purchase of equipment for 2,250. So equipment is an asset. It will increase on the debit side, and we are not given a balance there. You can go and check. You're not given a balance there. So it's 0. Sorry about the noise in the stomach. I'm hungry. Let's copy this. Creditors. Creditors allowances. We don't want the equipment anymore, or doesn't fit our specifications. Okay, guys. Let's see. Let's see the verdict. Oh, okay, do you have a member? I think you don't have a member. We don't have a member. Okay. Hope someone can shed the light if we did justice to this. So guys, please communicate with me if you think we could have done it differently, or if you have another idea that this could have been done. Here's my contact details. Bye.